stagnant? Are they printing money? Are they slowing down in the printing of money? Are they stopping the printing of money? So you need to know what the Federal Reserve is doing. Okay, that's one of the most important things to know the bottom. Number two, you need to know the manufacturing sector reports. So one of the leading indicator of economy, okay, is through some manufacturing reports that is given by the purchasing manager. So the purchasing manager normally will do what we call a forecast. 3 months, 6 months down the road, are we going to purchase more raw materials so that we can cater to the demand of our goods and services? Okay, so you must study the manufacturing reports. It is a forecast down the road 6 months later, what happened. Okay, it is a forecast to you. Okay, so that is what we call manufacturing reports. Okay, so of course I also study a few macroeconomic indicators. Okay, but these are some of the indicators that I study. Once you get the macro right, then you go and affirm it in the charts. So the second indicator I always look out for is a bottom reversal in the charts. Bottom reversal in the charts. Okay, so later I'm going to share with you one very simple strategy. How do you know that is the bottom from charting? Okay, the third indicator, which I always use, which is the most effective, is to study the whole environment of the stock market. Okay, that I call it the secret stock market sentiment indicator. So as an example, today I want to buy US shares. Not only I will study the S&P 500 index, because S&P 500 index only shows 500 top companies. Does it mean all the companies, all the sectors, all the stocks in America start to go in an uptrend? Not necessarily. So some of you, do you know that Nasdaq keep on hitting all-time high today over the last few weeks? Of course, I've mentioned this is because of 5G effect. But do you know, ever since June, the stock market in US has stagnated at the peak already? You might not know, okay? Because you never study the market. You study S&P only, you study Nasdaq. Nasdaq only shows you the top 100 tech companies in US. You did not study the whole 6,000 stocks, okay? So let me show you. This is what I mean, okay? Example, if today you type ExxonMobil, one of the leading stock in energy sector, okay, example, okay? You can see ever since June, it stopped its uptrend and start to drop, right? Because energy sector has been on a downtrend over the last 1 month. So that's the reason why in June I said the market has topped already for after 3 months of rise. You may start to sell away some shares, okay? Although the technology stocks, like for example, Amazon, Apple, okay, they are running, but it does not mean that the whole environment is running. You look at the financial sector, okay, Bank of America. Okay, let me see. I think my Wi-Fi is a bit slow. Okay, this is what I mean. Okay, you need to study the whole environment. If today I want to buy US shares, I cannot only look at tech sector. I cannot only look at S&P 500 index. That will be, okay, it's like I'm only studying, okay, one part of Morningstar. It's called Morningstar pattern. Okay. So what is a morning star pattern? Okay, you here, please take a photo. Consists of 6 steps. Okay, 6 steps. Number 1, there must be a strong downtrend. There must be a strong downtrend. How do you know a stock has a strong downtrend? We have, of course, many red candles, right? The more red, the more down is it. Okay, so there must be a strong downtrend. Then step 2 comes in. 1 day before the bottom, hopefully it's a red color candle. That means it's bearish. That day is bearish. All right, red color candle means it's bearish. Okay, then what happened? Point 3, which is very important. There must be a gap down. There must be a gap down in price. Okay, which is very significant when it comes to market bottom. It shows you that the pessimism has reached a peak already, has reached the max already. Okay, so there's extreme pessimism in the stock, in this whatever product. It may be an index, it may be a stock. Okay, so there is a gap down in price. Gap down means there's oversupply of shares. People are selling crazily at the early morning when the market open. Okay, then point 4, very important. Point 4, this candle, this bottom candle, hopefully is small in body size. That means it has a small bullish or bearish candle. The body is small. Body small means the closing price and the opening price is near to each other. So in the early morning, yes, there's a lot of pressure. People are selling crazy. That's why there's a gap down, right? The market makers is pricing it down lower than yesterday close. Okay, there was a gap down. But then again, today, some people, because of its cheap nature, this stock may drop cheap. Some people may rush in to buy this share. That's the reason why the closing price is near to opening price. It signifies that there might be a turnaround. Not confirmed, but might. Okay? Point 5, which is the most important now, which is there must be a gap up in price. There must be a gap up in price. So this gap up tells you there is a 180-degree psychology change in the sentiment for this share. From extreme pessimism turn to extreme optimism. So that's the reason why there's a gap up in price. There's more demand for this share. Something may happen. Something may happen, okay? And point 6, hopefully it ends as a green color candle, which is bullish candle. This is what we call a morning star pattern. When these 6 things happen, all you need to do is queue your order to buy this share the very next day. The very next day, okay? Now, let me show you the index price again. Let me show you the index price again, okay? You can see this is S&P 500 price. Okay, let me remove this. Okay. You can see it has been on the downtrend in March, right? 1 day before the market bottom. 1 day before the market bottom, okay? You can see it's a red color candle. Follow which there is a gap down in price. You can see there's a gap. This is a closing price, there's opening price. There's a gap down. So I would strongly suggest you to buy some books or read some info on what is candlestick chart if some of you never get to know what is candlestick price, okay? So there is a gap down in price, and this is what we call a small body candle. Okay, in fact, we call it a doji, a small body candle. It shows that the closing price and the opening price is pretty close. It's pretty close to each other. Follow which there is a gap up in price the very next day. Okay, between the closing of today and the opening of tomorrow, right? There's a gap up in price and a strong bullish candle at the close. A strong bullish candle, okay? This is what we call a morning star pattern. So once there's a morning star, all you need to do is the very next day, you go and buy the share of this particular counter, okay? Of course, this is index, okay? This is index, I'm showing you. That's the reason why that day it closes here on the 25th of March, 4 a.m. Singapore time, 24th of March, 4 p.m. US time. I say market may have bottom already. Start to accumulate because of this confirmation sign, okay? Then you may say, Daniel, this is S&P 500. What about local index STI? Same thing, okay? You can see this is STI. So it has been dropping crazily. There was a gap down before that bottom of the downtrend, right? There is a gap down. This is a closing price, this is an opening price, right? Then this is a small body candle. Can you see? Small body candle. So it signifies that some people are buying, okay, amid the strong pessimism, right? Then after which there is a gap up. There's a 180-degree change in the sentiment. followed by a strong close, right? This is a bullish candle. Of course, this is not green and red. I download from another chart provider, so it only show white and black. But black means it's down day, white means it's up day. Okay, it depends on your provider. Okay, so it shows me that this is a morning star pattern. That's the reason why. Okay, it bottom at 2,400. If you buy, okay, today you are richer by around 300 points, right? Okay, so that is a morning star. Okay, so that is the reason why I advise you, if you time the market correctly on the 24th of March, if you know that S&P 500 bottom, let me share with you. If you go and buy any stocks, you almost buy at the bottom. Example, this is Bank of America on the 24th of March. When the market bottom on the 24th of March, if you go and buy Bank of America, you buy at $19. Okay, of course, there was a time whereby it went up to as high as $29. Okay, 29 before the last few days it has been correcting. Okay, especially for financial sector. Okay, a lot of stocks in America has been correcting. In fact, almost the whole of America, except tech stocks, has been in correction mode over the last 1 month. Okay, believe me. Okay, keep track of market. Okay, not only the tech sector, not only Nasdaq. Okay, so this is Bank of America. But what about, like, for example, Nvidia, which is a tech stock? Okay, let us see Nvidia, which is one of my favorite tech stock, by the way. Okay, because it's a 5G tech stock. Okay, Nvidia has become the #1 chip maker in the whole world yesterday. Okay, it overtake Intel. Okay, so what I want to share with you is, if you get the market right, okay, on the 24th of March, okay, you determine that the market has bottom, you go and buy Nvidia, you buy at 200. Today it doubled to $400, 100% return in price, 100% return in price. Okay, what about Tesla? Okay, one of my favorite, again, 5G tech stock, because 5G is going to help self-driving car technology. Okay, it's going crazily. Okay, on the 24th of March, if you go and buy, you almost buy at the bottom of $400. Today is $1,004. This is what we call market timing. Okay, market timing. If you buy, okay, a tech stock giant like Microsoft, okay, same thing. Okay, if you go and buy, you almost buy at the bottom. Okay, on the 24th of March, okay, you can see it bottom at $130. Get your market right. Okay. Now I want to share with you, okay, although I get my bottom right, but in fact in January, before the market crash, I also luckily timed the market almost to perfection. Okay, I sell near the top. I issue a call in Facebook page. You can go to that day to see my 1-hour video in Facebook. In fact, I have a live Facebook live that day on the 17th of January. I call for a top. I say you better sell. Okay, and that was 17th of January. So let me go back to that Facebook video to share with you what I said, and later I share with you how I actually get the market top by studying the fundamental, the macroeconomic figures. Okay. So I would say it's very crazy. Okay, the market has been crazy. You can see a lot of stocks in the US. So that day I said the market has been crazy for 3 months. You better sell. Okay. So let's go back to that time, 33 minutes, 25 seconds. Okay, to share with you that. Okay, PowerPoint. So this is my reason for you why February you need to be careful. Number one, please take note. The printing of money that I tell you, the report operation, right, slow down or stop in February. Okay, so that day what happened? Take a look at this report. That day I mentioned about this. I said February you need to be very careful. Whatever you make, whether is it tech stock or whatever stocks you make, okay, whether it's Singapore stock or whatever, you better liquidate. Okay, better liquidate. That means sell away. If you don't liquidate, put your stop loss very tight, okay, because the market might fall. Okay, I don't know how severe. I at the time I don't even know what is COVID. Okay, I don't know the COVID case is going to be so severe. Okay, but I know that the market has reached a top already. So that day, if you really follow my advice, on the 17th of January, you go and sell your stocks. You avoid this collapse, almost 30% collapse in the index. Your stock may have dropped 50%. Over the course of COVID, some stocks in America dropped 70%. those tourism stock, okay, those airline stocks, Boeing dropped 70% its value. If you talk about this cruise ship stocks, okay, Royal Caribbean dropped 70% its value, okay. So when the index dropped 30%, don't think that your stock dropped 30% only. You may drop more than the index price, okay. So this is what we call, okay, at least you sell at the time cash is king. When it bottom, you buy again, okay. But not only that, if you go back, okay, to my Facebook page, last year, on the 4th of October, I mentioned you must buy. So what actually happened is last year, from September to October, there was a 1 month drop in price. There was a small correction. But on the 4th of October, I called for bottom. I said, you can buy now. You can accumulate stocks now, okay? Let me show you that video. Okay, of course, I show you all this, like what I said, it's not to prove something, but I want to show you that market timing is important. Okay, you need to know market timing. Okay, that was 4th of October. Okay, outlook for 4th quarter 2019. The stock market dropped further amid the recession. So at the time, last year in September, people were afraid of recession fears. Okay, then I said, no need to be frightened, start to buy. Okay, start to buy. So let me go to that PowerPoint to show you that on the 28 minute 50 seconds. I have a PowerPoint. That there is Thanksgiving, holidays, follow which December, there's Christmas, there's China, there's New Year, okay, in January. So I would say these 3 months might be a good month whereby there's a turnaround. Okay, get ready for a November festive rally. Okay, so of course the confirmation will be 2 things. Number 1, the economic figures still reflect a good economy. And number 2, I will look at the charts to look at the cash ringing system CRS to see whether is it. Okay, I stop here. Okay, so I mentioned this last year October. I said you can start to buy. Expect the market to rally 3 months. November, December, January. Okay, I did not say February because I know February might top. Okay, it might be topish. But most importantly, hear what I said. Whenever I analyze the market, I start with the economy first. Do you hear just now? I said number 1, 2 things. Know your economy. When I say economy, means the macroeconomic indicators. Okay, once you determine the macroeconomy is good over the next few months, then you confirm it with charts. In fact, that day I did this. I put down some of the charting indicators that show me there is bullishness. Okay, I studied some of the indicators there. Okay, one of the things I always study is just now, like what I said, Morningstar. One of the things I always look at is a Morningstar pattern. Has it occurred? Okay, or other stuff. Okay, so this is what we call methodology. Okay, I want you to know this. Why is it I can almost time it correctly, maybe not that accurately, but almost there, right? Buy on the 4th of October. If you buy, you follow what I said, you make 13%. Sell, you will avoid the crash. But what if you know how to short? As a professional investor, you can short to bet the stock or the index price drop. If you know how to short, you make 27%. But if you buy on 25th of March and you sell somewhere in June, okay, in fact, I issue in my Facebook page, you can go back, I said sell in June. And true enough, a lot of sector accept tech stock, okay? Don't only see the S&P 500 or the tech stock because you are only seeing a part of the whole entire supply, stock supply, okay? You need to study all the 6,000. A lot of stocks in the last 1 month has been correcting, okay? I said sell around June period, okay? It has been correcting for 1 month already. Look at your Bank of America, okay? Look at your ExxonMobil, okay? So that's the thing. You will have made almost 33%. That means in the last 6 months, I have made almost 73% out of this index. But what if I know how to buy the correct share? I can make much more. Today, let me share with you one of the stock I always talk about. Last year, I thought about it. This year, I thought about it. The last few months, I've been talking about it. Only now, I say you better don't touch, okay? Because this stock, I predict 1-2 months later, it was going to drop sharply, okay? Now, this stock is called Apple. Apple is all about market timing, okay? What I want to share with you is, if you follow the market trend. On the 4th of October last year, I said buy. Apple was at $220. If you buy at 220 and early this January, I said sell, right? I said sell. Before the crash, I said sell. And that day I said sell is 17th of January. It would have risen to 320. You would have made $100 out of this share, 50% return. Then what if you know how to short the stock at 320, right? You short the stock at 320, you buy back the day I said it's bullish, right? That very day, one day after the stock market bottom, right? You buy back at $230. You make almost another $100. But what if you buy again on the 24th of March, that day I said the market may have bottom. Then if you buy over the last 3 months, in June, I said sell. Sell at 360. Don't go and see this stock anymore, please. Okay? Don't go and see this stock anymore. If you want to buy and make money now, I would say you don't be the last bird to be catch in the cage. Okay? The big players, they may be selling away already. Okay, why? Okay, why I tell you it may drop sharply, it's because after the 5G phone is launched, this stock may be going into what we call a correction mode. The expectation of the 5G sales, everything about the 5G sales has already been priced in. Okay, has already been priced into this stock. Any sales that did not meet the expectation will cause this stock to drop sharply. Okay, so of course, from its 5G sales, most likely it will distribute its 5G phone in September. Okay, you have another 1 month to 1.5 months to play this share. Okay, but of course, this 1 month or the 1.5 months, okay, I will most likely profit take already. I will most likely profit. I won't want to buy again. Okay, I only buy near the bottom. Okay, but this is what I want to share with you. If you follow the market timing, you will have made $100 up, $100 down, and $100 up. You have made $300 of this share. If you don't sell now, and by September, really if you don't meet expectation after the launch of the phone, this stock may drop back to 220 again. So even if you buy at the bottom of 220, you will not be making money if you don't know when is the right time to sell. It's all about market timing. Sell when the market tells you to, not when people are still rushing in to buy. Okay? Okay, good. Okay, the next thing I want to share with you, okay, the next thing I want to share with you is about economy and the stock market going forward. Okay, like what I said, we are still in a bull market. Okay, this is still a bull market that can last around 4 to 5 years. Okay, my take is this is still a bull market with the liquidity in the market. It won't crash like much. It won't crash. But in the bull market, there will be some months whereby market correct. It's just like last year, September, it correct for 1 month. Sometimes it correct for 2 months. Sometimes it correct for 3 months if it's severe. Okay, there will be some correction. Every correction is time to buy. Do not buy when every day is riding new high like today, right? Do not buy into Tesla, please. Okay, this crazy market now. Okay, you are just falling into the trap. Okay, buy when it dropped to the bottom. Okay, that's the period whereby nobody want to buy. Okay, now going forward, the economy and the stock market will be in a, what we call the delinkage phase. Okay, that means economic figures will be very poor, but the stock market, whenever it drops, it will come back up again. Whenever it drops, it will come back up again. Okay, so today I want to share with you this. I strongly suggest you to pick up some lessons from this COVID. Okay, because this COVID, I say, is a great wake-up call for all of us. Not only for businesses. Businesses, if you don't revamp, if you don't do online business, I will say in the next few years will be dead. Okay, so business need to have some changes, drastic changes. Okay, but self-employed or employees, I think is a great wake-up call for all of us. Okay, because all industry in the past that's thought to be safe suddenly become vulnerable. Like airline industry, who would have thought airline companies will go bankrupt? And today Virgin did that. Okay, Thai Airways did that. Transportation industry, okay, has been like totally gone. F&B companies have been closing down drastically. Okay, and we don't know whether this social distancing will cost more. F&B is to close down again. Okay, and in fact today the news is that some cities in US, the pub that is open starts to close again. Okay, same with Korea pubs. Okay, some F&B. Okay, entertainment. Okay, industry has been really, really bad. Gambling industry has been affected too. Okay, Genting has been retrenching, and those not retrenched, they cut salary. Okay, finance industry this time around amazingly not that affected, but retrenchment has been ongoing. Logistics, the same thing. Oil and gas worse. Okay, oil and gas company like Hin Leong in Singapore, one of the largest oil and gas, declared bankruptcy. Okay, hotel industry is almost like gone until tourism come back. Construction cannot construct anymore. Every worker is locked down. Okay, so I would say COVID has really affect and impact a lot of industries, which in the past are so-called safe industry like F&B. Okay, we know that F&B. Okay, you still need to eat, but who knows? Okay, F&B will still be affected. So the impact of job loss going forward will be very hard. Okay, will be very, very big. And the recession has not really been felt yet. So retrenchment, I would say, is going to hit Singapore the hardest in the third quarter, which is coming quarter, okay, from July until September, okay. But then again, the stock market, most likely every time it fall, it will go back up again. So this is a piece of news in Business Times. It says, Singapore heads for the worst recession since independence. Economy shrink by -4% to -7%. Okay. Then it was mentioned a few months back, economists was forecasting Singapore may lose around 150,000 to 200,000 job loss this year, even with the fiscal aid from the government. Of course, our government PAP, okay, of course, promised us that it's going to have another 50,000 jobs, okay. I guess it's just for election campaign purpose, okay. Of course, okay, just for election campaign, they can't say, hey, sorry, I do nothing, right? Okay, it's for tomorrow's sake, okay. But is it really 50,000 jobs created? That is really, I would say, a question mark, okay. But then, a lot of economists has been forecasting Singapore will lose around, by the end of the year, around 150,000 to 200,000 jobs. And one of the reasons that the job losses has not been felt that much yet is because we just opened up our business, our economy. And in fact, almost 60 to 70% of business has not been fully open yet, I would say, okay? Has not been fully open yet. We are still in phase 2, okay? So we just opened our phase 2, I think 2 weeks back, okay? So a lot of companies did not have the chance to come up with their retrenchment list. Not yet, okay? And I would say a lot of companies are still delaying, okay? Are still delaying their retrenchment. Why they can delay their retrenchment? Because they no need to pay a lot of expense. Okay, some of them, okay, so-called, ask their staff, okay, to have unpaid leave, unpaid salary, okay, then, or some of them, okay, it's because they cut their costs because they don't need to pay rent. Okay, there's deferment of rent, okay. So there are a lot of packages coming. But what if all this stimulus is over? Okay, if the mortgage loan, the deferment of your loan is over by December, then I would say a lot of people will be affected by it, okay? So these are some of the things that I read from news over the last few weeks. Okay, a lot of companies start its retrenchment already, like Uber. Okay, Uber has been slashing its job force 14%. I got it from Straits Times, okay? Airbnb, one of the largest, of course, tourist website in the whole world, right? Okay, it slashed almost 25% of its staff as the pandemic hit the travel industry. Agoda, okay, also slashed almost 1,500 of its workers. Okay, one of the largest. Thousand jobs gone. Okay, another airline in Middle East, Qatar, okay, cut almost 20% of the workforce. Nissan, okay, one very big car manufacturing in Japan, cut almost 20,000 jobs, and they are still thinking about cutting more jobs. Okay, even the government are saying, okay, Australia is one of the country to open up first. Okay, but now they locked down Melbourne already. Okay, because second wave. Okay, so Australia unemployment rate rises to record high. Okay, almost 500,000 jobs gone. Thailand, another country in Southeast Asia that opened their economy faster than Singapore, Thailand may lose 2 million jobs because of coronavirus. Philippines, again, one of the early country that opened up their business, opened up their economy, reaches record high unemployment rate, 17.7%. That means out of 5 people, you expect 1 to be jobless. Okay, that is and it is at the bottom. Okay. Now, although we are in a huge bull market rally, okay, I forecast the next bear market crash will come 4 to 5 years later. In fact, why I say it's a great wake-up call for all of us. Okay, I'm going to be a forward today. I'm going to share with you my so-called my predictions. Okay, I think the next bear market crash that will come 4 to 5 years later will be the most severe bear market you ever witness in your life. Okay, yeah, that's my prediction. Okay, it will be the most severe bear market crash you ever witness. Okay, and perhaps maybe the largest market crash in the history of mankind. If you want to know why, what's the reason 4 to 5 years later there'll be one large bear market crash, can you show me a one sign? Okay, just show me a one sign. I'm going to share with you the reason why. Of course, you think through it to see whether there is some truth to it. Okay, to see whether you think it may be coming true. Okay, so you think through it. Okay, do your own homework. Okay, but I want to share with that reason. Okay, why I think 4 to 5 years later you're going to witness one of the largest crash in all time history. Just show me a one sign. Okay, just show me a one sign. Because I don't want another COVID to come 4 to 5 years later, another sudden incident to come, and you're caught unaware. So I want you to keep track of some macro figures 4 to 5 years later. Very important. Okay, you must avoid the crash. Okay, whatever you make the last few years, the next few years, because of this huge bull market rally, okay, one crash can wipe out everything. So you must foresee it. Okay, it may happen. Okay, thank you for your participation. Okay, this is the reason why unemployment rate may rise, but inflation figures keep on rising. There is hyperinflation. Okay, so amid the bubble burst 4 to 5 years later, what may happen is GDP may be falling, may be in a contraction phase, unemployment may be rising, but cost of goods and services still keep on going up. There's hyperinflation. Okay, why? The tens of trillions of dollars that's pumped into the stock market is not going to go back to Federal Reserve anymore. The moment they print, that means the money is already out in the market. And this money is being used by the banks to lend out to businesses, to lend out to individuals, to lend out to a lot of people who need the money, right? But what if the vaccine is ready found end of the year? All these people who borrow the easy money and they don't need money anymore because the business is back to pre-COVID times, right? You don't need to wear masks anymore. People will come to your shop, to your restaurant, to whatever, okay? After the vaccine is found, right? You don't need the money. So these tens of trillions of dollars that's being printed, where do you think it will go? It will inflate the asset prices. The businesses that can get easy money, they will take the money not to expand their business, but they will take the money to buy shares. Because if you buy the right share, you can make 50% in 1 year. Why will you want to go and expand business when there's still uncertainty in the market? Okay? So you will go and speculate to buy properties. I know a lot of businessmen these last few weeks have been trying to borrow a lot of money from banks to buy properties that has fallen. Okay? So all these businessmen still want a good return on their investment. And when interest rate is so low, they are more likely to go and buy all these assets. Okay, it will lead to hyperinflation in assets price. So that's why going forward in the next 4 years, I feel the stocks will hyperinflate. The property price will hyperinflate. Your cost of goods and services will still keep on going up. There will be hyperinflation because of the tens of trillions of dollars. But then again, those who borrow now to go and buy at cheap interest, what if the interest go up to a large interest? Then most likely, those who want to speculate, they can't afford to pay the mortgage loan anymore because of the high interest. They may default. And once they default, the bubble will burst. Unemployment will shoot up, economic bubble burst. And I feel we are not far away because NASDAQ, some tech stock, is at all-time high again. Then what happened? At the time, there will be hyperinflation. When there's hyperinflation bubble burst, Federal Reserve will come in and print money. But this time around, do you think they will print $10 trillion again to give to the whole world? Most likely not. Because if they print a lot of money, it will lead to more inflation. And when there's more inflation, when the cost of goods and services go up, US will go riot. So this time around, they riot not only because of the blacks, but they riot also because they're out of jobs. In fact, some riot because they go and rob is because they're out of jobs, okay? And this will get worse 4 to 5 years later. When more people are out of jobs, but then the cost of goods and services is so high, US will never print money to save the whole world. This time around, they can do it is because inflation figures is very low. Although the unemployment rate shoot up, but inflation figures is so low. They can print money but don't hyperinflate the market. But when inflation figure 4 years later is at sky high, they will never print the 10 trillion to save everyone. This time around, all countries are bailed out by US Federal Reserve. 4 to 5 years later, I'm afraid you won't have such a lucky environment, okay? So they will only print money to bail out itself. And that means the whole market will have what we call a U-shaped recession. This time around is a V-shaped recession. That means fast go down, fast come out. 1 month, the stock market back up because of the printing of money. But 4 to 5 years later, we may not be that lucky. Okay, just be forewarned. US can never print so much money if the inflation figures is very high. Study your macroeconomic. Okay, study the macro. Okay. So then again, how do you prepare yourself over the course of 4 to 5 years? You know that 4 to 5 years is going to cause a hyperinflation in the stock market. This is a time to accumulate your wealth in shares. There's no better time than now. Every time Apple goes down, it will come back. Apple goes down, it will come back. Tesla goes down, it will come back. Okay? So buy some good cheap stocks at the bottom every time it correct. Okay? But then again, 4 to 5 years later, you need to know where is the top of the market. Sell away all your shares. Cash is king. Okay? Wait for the crash to come. I will bet 4 to 5 years later, you can see a lot of stocks that is cheaper than even, okay, during the COVID period. Okay, this time around, there are no stocks that dropped to $1. But in 2008, there are some stocks that dropped to $1 in America. Okay, like for example, some financial stocks like Citigroup. Okay, but this time around, there's no penny stock. Okay, so 4 to 5 years later, I anticipate the whole bubble will burst, and it's a lot worse than this time around. So that means 4 to 5 years later, you can use the money that you make over these 4 to 5 years and buy very cheap stocks, very cheap assets. That's how you create your own second income or your retirement. Okay. So today I'm going to share with you, okay, my methodology of investment. How I actually created my wealth over the last 12 years. In 2008, the last financial crisis, at the time, okay, I tell myself, I must make money, okay, over this bull market. In the next bear market crash, if I make enough wealth, I'm going to buy some cheap assets. Okay, and it has helped me gain a financial freedom. So today I want to share with you the 4 steps that I do. Hopefully in future, you can also implement in your system, okay? And these 4 steps, I call it TSTM method. Okay, T represent trend, stock, trading, management. But the thing is, this 2 days program is not for everyone. In fact, in the next program, it will be up and coming, okay, in July. But every program, I only accept 50 students, okay? Only accept 50 students. Just in case today, later I will share with you more about this program. But just in case you are not the 50 who sign up, okay, you may be beyond that, okay, 51st, then I'm afraid, sorry, we cannot accept you, okay, because there's a limit to our capacity. So that's why today I will share with you a summary of what I teach, okay? Because just in case you cannot be allowed to join this program, at least you have some, what we call idea, how to formulate your own methodology, okay? Now, the first thing I always study is trend. Just now I said already. I have my own indicators. All these indicators I built up over the years. So next time, if you spot any indicator that will help you in identify trend, put it in your arsenal. Keep on putting in your arsenal. Don't only focus on stock, okay? Look at trends, okay? So there are 3 types of indicator I always look at. I look at a lot of indicators, but 3 types. 1, macroeconomic indicator that tells me about the whole economy. Number 2, I will look at charts to show me a bottom reversal in charts as a confirmation. Number 3, I will also look at the whole environment of stocks. I always say, don't only study the index. If you only study S&P 500 index, you're only looking at the large cap stocks. If you only study STI, you're looking at the large cap stocks. You need to study the whole environment. The 6,000 stocks listed in US, are they bottoming together? Then you know that is the real market bottom. That is the real top, okay? So that is what we call the stock sentiment indicator, okay? So of course, I have shown already, if you follow my so-called course, you will have made almost 60 to 70% over the course of 6 months, okay? Just by playing the index. If you know how to play the stocks like Apple, you will make more than that, okay? So trend is important, market trend. After you study the market trend, the next trend, I haven't tell you about this, is called sector trend. The next thing I will study is what sector will run the most. What sector will benefit from this uptrend? So in US, this is what I call the 4 pillar sectors of US economy. Okay, this is my take for you. If you want to buy Hong Kong shares, okay, let's say Hong Kong market, the next thing you must know is what sector in Hong Kong will contribute GDP to Hong Kong government the most. Okay, you must go and study. Like you buy Singapore stock, what sector in Singapore will contribute the most to Singapore government GDP or Singapore GDP? You must know the pillar sector of that economy. So when I buy US shares, okay, I always buy US shares that belong to these 4 sectors. These 4 sectors will always outperform all the others. And this will be the focus of Wall Street. Okay? Technology, finance, energy, healthcare. In US, there are 11 sectors, but these are the 4 sectors that always run whenever the market trend is up. Okay? This is the focus. Because technology, US is the #1. So like Singapore, we also have tech stock. But Singapore tech stock don't contribute to Singapore government a lot of GDP. So that is not the focus in Singapore. So every country got its own pillar sector. Finance, US is the leading financial hub in the whole wide world. Energy, they are the #1 energy sector in the whole wide world and #1 energy country in the whole wide world. Healthcare, they are also #1. They set the standard to FDA, okay, to clinical trials, okay. So all these sectors are the major sectors of US economy. Then from this sector, every time when market bottom, I will identify which sector will run the most or which sector is the sector that turn around first. Okay, this time around is technology, okay? Then followed by finance, followed by healthcare, and the last to run is energy. So that means at the turnaround, you better buy some tech stock first before you buy some other sectors, okay? So that's called sector rotation play. Now, the next thing after you identify the sector, like for example, technology is good. The next thing is, what are the stocks in tech sector you need to focus on? So that's where I study shares. So it's always a funnel down approach, okay? So most importantly, number one, market trend. Number two, sector trend. Number three, individual stocks. So I like to pick stocks when it's showing me a bottom reversal sign. And that means I like to look at charts when I study shares, okay? So today I already shared with you one method that I always study to look at the bottom of a share, okay? The bottom, the bear market bottom, okay, of a share. So this is called Morningstar pattern. Just now I already shared with you there's 6 steps, right? 6 steps. So today I want to share with you, these are the stocks that show Morningstar when the whole market trend bottom at the same time. So you can see this is Google. Okay, you can see this is a big drop. Then this is a red color candle, a down candle. Then this is a gap down. Then this is a small body candle, right? That shows signs of a reversal. Then next is a gap up. Can you see a gap up? A green color candle. This is a Morningstar. So that day the market has bottomed, I look at sector, I look at stock. If the sector tells me that tech stock is a sector I can look at, then I study Google. I go and buy Google. So when do you buy? You buy the very next day when the market opened. Okay, if you buy at 1130, today Google is 1500. Okay, went up 1500. So you will have made almost 25% return. This is ExxonMobil. The same day, the market bottomed at 23rd or 24th of March, the same day ExxonMobil bottom. So this is a Morningstar again, red color candle, gap down, small body, jump up, gap up, green color candle. That is a Morningstar. If you buy at $36, today it went up to almost 55, the highest in June. The last 1 month correct a bit. Okay, so you have made almost 30 to 40% return. So this is my point to you. When it comes to stock, I would like to study the charts to know exactly where is the bottom. Okay, but I would like to share with you more. Okay, whenever I study a chart reversal bottom, I always classify chart reversal bottom into 2 different types. Okay, remember 2 types. One is called price continuation bottom. The other is price reversal bottom. Okay, always know it. Price continuation and price reversal. So what's the difference? Example, imagine this stock is on a huge bear market trend, right? Huge bear market trend. If you want to buy in the huge bear market trend, you don't buy here or you don't buy here. In a huge bull market, right? Seldom will you see Morningstar anymore. Seldom, okay? Seldom, okay? Morningstar only happen near the bottom of a bear market crash. So what I mean by price continuation bottom, that means now it's continuously on an uptrend, bull market trend, right? Going up. Whenever it correct, buy at that bottom. That means buy at the bull market bottom, the correction bottom, whereby it will continue to go up. Okay, now it's in a huge bull market rally. So in charting, there are 2 types of patterns that you can look up for. One is called price reversal bottom, like Morningstar. The other is price continuation bottom. Of course, today I really don't have the time to share with you everything. I will do it in my 2 days class. And if you join my 2 days class, this is what I'm going to do it for you. You don't need to study charts anymore. I know some of you hate charts. You say, Daniel, if I want to look at Morningstar in Singapore, I need to look through 1,000 stocks. I don't have the time to sift through all the stock charts and locate the Morningstar today, right, to know which stock to buy, right? So that's why in the class, I'm going to do this. I'm going to give you a free screener for you to pick up based on the charting methods that we use. Okay, there are 5 automatic screeners. So what do I mean by screener? That means out of 6,000 stock that's listed, at the press of a button, if you want Morningstar, you just press on Morningstar. All the 6,000 stocks, whichever that has Morningstar will appear Apple at $370. They will ask me, what orders do I want to put in? Is it a market execution orders? Is it a limit order, a stop limit order, a trail stop order, or trail stop limit order? I really urge you to know inside out what are all these orders. A lot of people buy stock, they don't even know what is trail stop order. They don't even know what is stop limit order. Okay, so the thing is, you must recognize and know what kind of orders to execute so that it can automatically execute while you are not at your desk. You don't need to open up your computer anymore. The moment you place the order, you let it run. Okay, you let your profit target hit, you let your trail stop profit target hit. Okay, you trail the profits. So all these are orders that you must know. In the class, I'm going to spend time talking about it. Okay, if not, you need to spend a lot of time sitting in front of your desk. Okay, now the next step, the last step that all investors need to have is a good fund management practice. So in this class, I'm going to share with you what is your profile. A lot of us, we don't know what's our risk profile. So I'm going to do a survey to help you to identify your risk profile. Okay, and based on your risk profile, I'm going to set the money management rules according to your risk profile. Some of you are conservative and some of you are aggressive. So you need to know what kind of investor you are. The next step is, after you know what kind of risk profile you are, then I'm going to help you to allocate your funds so that you can build your retirement portfolio. That means I'm going to share with you how many percent of your funds should be allocated to shares, how many percent of your funds should be allocated to cash, how many percent of funds should be allocated to commodities or derivatives. Okay, so all these are what we call fund management. So different individuals have different. It really depends on, sometimes it also depends on your age. Okay, sometimes depend on your risk profile. Okay, so I'm going to help you in doing that. So you can see this is what I call the comprehensive package to be a successful investor. In this class, I'm going to teach you, okay, all these, okay, I call it the TSTM method. Okay, these 4 different modules, starting from identify trends. I'm going to give you the indicators to know where is the top and bottom. And after which, we are going to identify sector. A lot of you never study sector. This is a must. Okay, what is the pillar sector of that particular economy? Okay, which sector run first? I have an indicator to tell you that. Next, module 2, we are going into stocks. And stocks, we are going to make use of screeners to help you to handpick which is the stock that has Morningstar today. And in fact, I'll give you 5 different methods. Okay, what is continuous bottom pattern? What is reversal bottom pattern? Module 3, we are going to live execute a trade. And I'm going to share with you how to place the correct order so that you have a peace of mind. You don't have to be in front of a screen. And after which, I'm going to identify your risk profile so that you know what is portfolio allocation. Okay, so I would say this is a pretty comprehensive 2 days online stock mastery program. But like what I said, not all of you can join. We have a limit. Okay, because in the class is live, you need to ask me questions if you don't know, so I need to answer. I cannot have too big a class. Okay, so that's why every batch we limit to 50. But then again, this program, we launched it actually recently. We launched it in June. Okay, if you join, you'll be joining the second batch. Okay, why is it we launched it in June? Let me explain. Okay, in the last few years. Okay, is this stock called Facebook? Okay. In the past, I write a lot of blogs. Okay, now I have no time to write blogs. Okay, it's called daniellow.com. Okay, so you can see 2013, right? 2013, July 2013, I issue a stock tip. Okay, I said this may be one stock for retirement. It's called Facebook. At the time, Facebook is $30.